Financial technology, or Fintech, has made digital payments, banking, and investing online the new normal.
Fintech has really modernized old versions of conducting business, whether that's refinancing mortgages, whether that's generating quotes for insurance, whether that's just sending payments from one person to another.
Fintech in this next wave will continue to improve, democratize access to banking, democratize access to financial services on the investment side. And certainly now you have meaningful dispersion between experiences for end consumers, whether those be, again, businesses or individuals.
We live in this age where technology has led people to expect convenience, and that goes into ordering food, but it also goes into spending money.
In recent years, the fintech sector has experienced significant growth. Global transactions for digital payments and neobanking, or banking without a branch, have hit all-time highs and are expected to keep increasing. One of the most notable players in this space is Apple.
Apple produced around $10 trillion in payments volume last year. That was number 2 in the world next to Visa, so they're above MasterCard and Amex. They should be focusing on their services revenue. Now, services is about 25% of current revenue. We think that will be the number one driver of their growth going forward.
Apple launched Apple Pay in 2014 and in 2019 partnered with Goldman Sachs to create its credit card alongside its high-yield savings account.
You could get 4% interest or better on the cash that was just sitting in your Apple account. All these things are very consumer-friendly, but they lost a lot of money for Apple's partner, Goldman Sachs, which was the bank that was supplying these loans and underwriting these credit cards. Apple wanted to provide loans and credit cards to basically anyone who applied, and that meant more risky borrowers that Goldman was then on the hook for.
Apple got a lot of the wins out of this in terms of customer acquisition, rev share, and Goldman got left holding the bag, which was the credit losses that ballooned to the order of billions. Apple now has decided to partner with Affirm.
Affirm is one of the pioneers of buy now, pay later financial services. It doesn't charge hefty interest rates and offers a variety of payment plans for both consumers and businesses.
For the consumer, it feels far more transparent. In most cases, they're actually not getting charged interest on it. Affirm and names like Klarna ultimately get paid by the merchant for that conversion. And there's been a lot of kind of controversy around, is this really something that should be reported to FICO? How should this affect consumer credit?
When interest rates went up over the years, companies like Affirm had to now deal with those higher operating costs of loans being more expensive, but still trying to market 0% interest. With these higher interest rates, with inflations, the everyday consumer gets squeezed a little bit, and they might miss a payment. Affirm, over the course of 2022, it took a big hit, and it's still working on recovering up to where it was at its highs.
Fintech saw notable investment spikes in 2019 and 2021. However, in recent years, rising interest rates and economic uncertainty have negatively impacted the sector, which has yet to fully recover.
Direct to consumer, direct to small business, and crypto are the most challenged parts of this market. Regulations are only getting more complex, and cybersecurity, the advent of hackers and those operating in the gray, makes those spaces incredibly difficult to manage.
When you're in the business of money, you can't just grow and figure out profitability next. And with changing financial landscapes, time will tell if these are businesses that will stick around for the future.